All right, guys, we're back again with another great episode of PFREI. I'm your host, Fuquan Bilal, passion for real estate investments. Oh, man, this interview, I've actually interviewed this gentleman in the show before. I was joking around with him before we got started, and I was like, man, I don't even have to read your bio. People should be ashamed that they don't know who you are. All the value you've added to the various different communities and real estate, whether you're doing wholesaling, fix and flip, paper especially. People should know who you are. Someone was embarrassed, but I'm going to read your interview and your bio anyway.
Okay.
I appreciate that you cut it down to a few paragraphs. I usually get tongue-tied when people give me a 2-page bio, so I really appreciate that, straight to the point. But man, it's an honor and a pleasure just to have the time to talk to you. We're in a few masterminds together. We always see each other. I've learned a lot from you in the note business. I've learned actually the seller carryback process of the notes from you, owner finance strategy. When I got into the note business, I learned the institutional paper, second mortgages. I had the opportunity to see you speak at a noteworthy event, maybe 2012, was blown away and was like, wow, what is this seller finance thing? And I've been doing real estate since 1999 and just learned that strategy in 2011, 2012. So, but let me start off with the bio. Eddie is a real estate investor, author, highly sought after consultant, speaker, and expert panelist on the topic of note investing and creative deal making. Eddie is the nation's most experienced private real estate note buyer. I call him the deal architect, guys. Over the past 40 years, he has closed 50,000 private mortgage note deals totaling over $5 million. 500 million, sorry, respectfully. Through his company, Note School, he has also trained over 10,000 real estate note investors across the US and the world. So yeah, noteschool.com. Make sure you guys go check it out. It's a lot of great value. The Note Expo usually happens in November. I missed it this year. I traveled 19 times and I said, no more, Eddie. I got to take Q3 off, man. I was burnt out. Finally, I thought I would never run out of energy, but this year I ran out of gas in the tank. But welcome to the show, man. I'm glad you're on the show. How you feeling?
Thank you. I'm good.
Yeah. This great, man. It's, this podcast, I usually ask people why they're passionate for real estate investment. I think we addressed that the first time. I actually invited you to the show because I want to jump right into what's happening. I love the market we are in. And the reason I say I love that because I can see, like, I kind of slowed down on doing paper. I started doing a lot of fix and flips. Yeah. Now it's getting, tougher for fix and flips because interest rates are increasing, which is getting harder for buyers. The refi market is gone. So we know what's happening now. Inflation is here, recession is coming. We got about, I think, I don't have a crystal ball, guys, 24 months. We're going to go through it. And then maybe somewhere around Q4 2024, coming into 2025, rates may go down. I'm not an economist, by the way. This is just the Fuquan Bilal, prediction. But I think we'll be back in good graces, maybe 2025. So I'm preparing to go through the next 24 months of doom and gloom. And the great thing about that is the pendulum switches back to the paper business, because this is the time to get creative, to become that deal architect. So we got Eddie Spiel on the show to kind of talk about how what he does in his market space can add value in the tools you need to use in his marketplace. So go ahead, what you got?
Well, you bring up a good point, and that is, the market, we are definitely in a real estate recession. I don't think there's any doubt. The year-end stats are in. So Fuquan, last year through MLS, they sold about 6.8 million houses. And so they were projecting to be way off this year. And they were projecting to sell 4.5 million houses. But the sad news is they didn't break 4.1. And they're projecting next year to sell 3.5 million, but they're not totally sure that's the case. You and I are kind of come from the world of loan servicers and asset managers and stuff. So we're kind of data-driven decision makers. A lot of people in real estate, they're very good at their KPIs and they're very good at things, but I don't know that they always really totally know the data surrounding the market. By the way, your market is listed as the strongest market. Market Watch just had done a release and said, Market Watch is the online version essentially for the Wall Street Journal. And they said real estate is definitely going to decline 2023 in all markets. That's their prediction. The strongest of the markets are the Northeast, and the weakest are the West. But that property has not been this unaffordable since 1985. So what snapped the cord here was the rates. And the other thing, Fuquan, is the loan origination industry is in dire straits. Just honestly, they're just in a bad way. And what started that was they had guaranteed after 2008 to go do mortgage-backed securities again. They had the rating agencies said, you got to go guarantee these loans to the bondholders. So they went several years and it's no big deal. And all of a sudden when the virus hit, 8 million loans go delinquent. And so guess what? If you were the guy that was the sponsor of that securitization, you had to write a check every month to the bondholders, even though you weren't getting a check. And people say, well, how much money was that? And the answer is, including taxes and insurance, it was about $1 billion a week for 18 months.
Wow.
And so people don't realize the financial strain that industry has been in, and they could kind of hide the sins because they could borrow a lot of that money and pay interest on the money they weren't getting back and so forth because they were originating so many loans. But the profit has gone out of the origination business and the volume has obviously gone out of the origination business. So we have two big factors. We've got people, including me, Fuquan. Everybody said nothing trumps supply and demand. I mean, if you ask me, Fuquan, you've known me for years. If you'd have called me before the virus and you said, Eddie, what's the one rule in real estate that always is going to be the dominant you can look to, I would have said supply and demand. Well, that actually has turned out to be untrue because we have a shortage of properties, but we have a greater shortage of buyers wanting to buy.
That's a good point. I was looking at the 6 million house shortage a few months ago, and I was thinking the same thing.
I've always thought that was bullshit. I just am telling you right now, when they started putting out those numbers, we're 5 million houses short and stuff. That's always been a joke to me. Where would they come from? They got to move from other countries because or either that they're going to move out of every apartment in America. I mean, that was just like hocus pocus stuff to me, right? But the bottom line is, this is my 6th real estate recession. 1980, 1986, 1998, 2001, 2008, and now 2022. That's 6. You know what has been the common thread in every one of those?
What's that?
Availability of credit or cost of credit. The two things that will stop the housing market more than anything else is people can't borrow money to get a house. Now we have both. Okay, well, the obvious is interest rates. We've seen the sharpest increase in rates in the shortest period of time this year that we've seen. But that's not the real story. Or that's not the whole story. So Mortgage Bankers Association generates what is called a mortgage availability index. It's a scoring system they've developed. So before the virus, to get a conventional mortgage, the score was 185. Okay? The score is 185. Not right now, today, the score is 100. So the score went up to 185 February of 2020. And today, at the end of the year, right? If you just picked a point in time and said end of 2022, the number is 100.
Wow.
So it's very obvious that there's more than just a rate issue, there's a who can get a loan issue. And that is what's driving the market. And the other thing is, you and I have been around the house flipping world, right? Biggest house flippers in the business. You and I have hung around them a lot, right? They were flipping houses. Probably 99% of the houses they were flipping were going for investment purposes. They weren't going to consumers. Now, your model, Frequan, your model may have been going to consumers.
Correct. 100%.
But you weren't normal in that space, right? You were the ultimate house rehabber. Go take a piece of junk and make it look this beautiful, most incredible thing you've ever seen. You are an artist. You are.
Thank you. Quality housing is our guarantee.
You are, dude, you are world class at it.
Thank you. I appreciate it.
I've seen them all, right? But you're good.
Appreciate that.
These guys that you and I hung around with, they were flipping houses to either hedge funds, or they were flipping houses to an HGTV buyer that was going to use it for a rental. They weren't flipping to consumers. And earlier this year, the water faucet cut off because of rates. And so that is really what's happened in the market. Now, that's all the bad stuff, right? That's a real estate recession. You know, that's every news source out there saying real estate is going to decline next year. And there's the buyer sentiment for people buying property is crazy low. And the affordability factor for property is crazy low, and back to the 80s story and all this stuff. That's all the bad stuff. The question is, you and I hit a bonanza after 2008, right? We hit a bonanza.
Yeah.
That's because we understood how to make money in a recession, a real estate recession market. We weren't smarter than other people, but we were better informed about how to do that. And most real estate investors didn't know how to do that. And I would say that most real estate investors in today's market don't know how to do it. I don't mean they can't learn it. That just means that if all you've ever done is flip houses to and people using a house for investment purposes, and that investor has disappeared, or he's offering 25% less, which is all but disappeared, then all of a sudden you got to reinvent yourself.
Yeah, seeing a lot of pivot to creative financing, keeping them for rentals, or wholesaling with wraps, and a whole bunch of crazy stuff. That's it's really hairy and scary is what I call it. The way that this is structured might bite them back or something like that, you know?
The reason, so I was in the note business in 1980, and around 1990, I developed the note system for home investors. And then, of course, that was when the guy that founded Home Investors was just starting the franchise, and I developed a note system. And then I did that for literally hundreds of real estate investors. Like, this is a template, this is a blueprint, this is a formula, make a note like this. And they were doing it so they could sell their notes or sell part of their notes or whatever it is they were trying to accomplish. What I found is real estate investors don't accidentally make seller financing well unless they're taught. That's just a guy that's looked at a few 100,000 notes.
Yeah.
Right. And so, I'm like you, I want to have an influence and help them with making notes that will pay them back. Right. Because the key to building your own bank is that your bank gets paid back the loans that it has. Otherwise, you don't have a good bank.
Correct.
And so I think that's kind of a little bit of what you're talking about. And that's not to scare anybody, but it's just to say that I've not met anybody yet in my career that accidentally, intuitively understood underwriting without, a framework of how they develop that thought process. Listen, why do hobbyist landlords hate rental properties? They don't know how to manage the property, and they don't know how to underwrite a tenant.
Correct.
Right? I mean, it's pretty simple. I mean, you're saying it's a proven formula, and it is a proven formula, but it also is a formula.
Yeah. Yeah, I think it's important to note that, now that we're in a market where things are transitioning and it requires creative financing, one, to make sure that you have the proper documentation that you're writing this paper up on so you can sell it, right? And it's clean, it's underwritten properly, and you're setting it up for success, not only for the seller who's giving you that opportunity, but yourself also to the buyers on your downline. So you're trading that paper clean. That's the biggest challenge I see in the paper business. Is you see it all the time where you got to clean up title, you got to clean up chains of assignments and everything else. That makes the paper cheaper. You have somebody clean it up, you're good, but doing it from the start is important. And it varies state to state. Every law is different in every state, how you do this and do that.
Yeah, and obviously there's a lot of talk out there, a lot of conversation. A lot of people see existing mortgages that are, low rates, with maybe the opportunity of taking over those low rate loans, subject to, and that's a very valuable business, but it needs to be done right. I mean, there's some vetting processes that if somebody's going to do sub 2, they need to know. And if they don't, they're going to get quite surprised. There's about half the states have delinquent mortgage protection laws. And so they protect the borrower in a capacity that people are unfamiliar with. And, and so that means that if you're going to do a sub 2, is that borrower now under the umbrella of a state law that protects him? He's a protected class, and you can't deal with him like you could in other states where he's not a protected class. And, we're just trying to get the truth about the business. You can do sub 2 and do it very effectively, but I gauge it like this. When you drive through this town, Fuquan, there's a speed limit.
Yeah.
And the guy is going to be sitting there, and he's going to give you a ticket if you speed. If you're unaware there's a speed limit, then when he stops you and you say, well, I didn't even know there was a speed limit, what does he say? It doesn't matter, right?
Yep, doesn't matter. Should have did your due diligence.
If you get in trouble for sub 2, you can't say, well, oh man, I didn't know. I just learned about it on TikTok. I didn't know there was problems.
That's where it's at. I got it from TikTok. I Googled it. And I found the documents.
Yeah, that's all good. So there's a process that we have developed that we think is safe and tight. There's a process we've developed. I've actually done some of that with an old friend of yours, Jeff Watson.
Yeah,
and attorney, and we're the long timers in the business, and we want to keep it good and clean and tight. And so we're trying to help the world in that area, and then buying on terms. Like, how would you make an offer on terms, and what is a good offer? What is favorable to you if you're going to owe the money? How do you structure the deal at a guaranteed scenario that you're getting below market rates?
Yeah. This is that deal architect talk. Architect talk, y'all. Listen up. It's very important. Yeah. You don't want to miss this part.
Well, I mean,
buying on terms.
I've structured, I've helped people structure thousands of deals. So I've learned a little bit. I've learned some patterns. I've learned what people are likely to do that will be very advantageous for you. And I've learned how to kind of position it and stuff. And I don't know that anything is brain surgery, but, we've run a long experiment. We've been testing it a long time. And I think that's honestly, Fuquan, it's funny, like so many young real estate investors from the business, like 12 months ago, I was just the old guy. He's out of date. He's old. He's
That's the guy you want to be around.
Well, now they
because you
do.
want to be
Now they
around.
do.
That's where all the wisdom at.
Well, apparently, if you've lived through some of this stuff before, it has a lot to do with the confidence you can progress forward with. And I think so much of it right now, Fuquan, is just mindset. You are a great mindset person. You're
Thank you,
just
man.
really solid. But right now, like if you're looking at the real estate market and you're thinking about it's going to be good for me or bad for me, it's a lot to do with what you know and the confidence that gives you.
Correct. Like I was saying earlier, I'm preparing for the next 24 months for the fix and flip part of my business, even though it's going to be slow. Like you said, we're still rocking and rolling. We're 20 minutes away from New York. Still have some people flocking over. And to me, it's like I provide a good quality property. So it's marry the property, date the rate scenario, right? You can always refinance it a couple of years later, right? When rates go back down.
Yeah.
So we're still, moving forward in that sense, but just focusing on building more cash flow. So we can still make investor distributions, cover SG&A and COGS and all that good stuff until we get back to the other side where things start to ramp up again. So implementing some of those creative, buying on term strategies now, instead of using the lenders, making the homeowners, the property owners, the bank, like a commercial deal, old timer, who owned the property for 25, 30 years. They didn't do any repairs. It's a 40 unit building. Hey, why, you got 60% occupancy. I'm not going to get permanent financing on this. I'm not going to get bridge funding. It's crazy right now.
Yeah.
So why don't you become the bank and structuring deals where they become the bank? And you helped me structure a deal years ago. You first talked about buying on terms many years ago at a note event, and I took notes, implemented it right away, and it was the best thing ever. And I think a couple of years later, I thanked you like, hey, man, I took that piece of information, structured a flip deal, made the homeowner the bank, and boom, it's a home run. So yeah, thank you for that. And that's what I'm saying, hanging around people who season, not older guys who season in the business, who have the wisdom. Those are the guys who I look for when I join masterminds, right? Because there's so much information that you guys can share and add value. And we were just joking, I think, at the last mastermind we were at, not like joking, but we see what's happening with the market. And then there was a need for a tool that you were bringing to the group a while ago that the people couldn't understand how to use it. And now it's the only tool they can use, the buying on terms. So we can continue on that conversation, buying on terms.
Well, I accidentally figured this out. And I'll tell you why I said that. So I started in 1980 buying notes, right? And I bought seller finance notes from 1980 until this very moment, right? 42 years. And so we bought these notes, and individuals would call us up. Mom and pop, we owner financed a property, and you would go through this whole interview process. And basically what you're doing is finding out their story. And Fuquan, very few mom and pops that generate seller financing, they don't know what they're doing, right? And they don't do things in a very sophisticated manner, right? In other words, they don't originate a loan the way you and I would originate a loan. They just don't ask good questions, right? And so when I would see them agree to something that to me was like not logical, because I'm seasoned and experienced, my glasses look different than theirs, right? And they would just do stuff that I thought was like, who in the world would agree to this? And then it started becoming like a psychology experiment. Like, why was that logical to them? So here's what I say now after going through literally tens of thousands, maybe hundreds of thousands of deals. I've learned what's logical to somebody that would carry seller financing that's illogical to you.
Mm.
And so I equate it to a seventh grade junior high teacher. Let's just say that you're a junior high math teacher, okay? You don't think like a seventh grader. You're the teacher. You're an adult. But you have to know how a seventh grader thinks.
Yeah.
And so I have made that what I focused on, because I think that's the greatest contribution I could give to the business. Fuquan, you don't know anybody else that's looked at over 100,000 seller finance notes.
Absolutely not.
Okay, so that's my gift, right? It was my journey and I was on it. And so now all of a sudden I know how to translate and teach you how to make offers that sellers will do a very high percentage of the time. And it is killer good for you because you know what you're negotiating for and they don't.
Yeah, that's good, man.
Let me give you the quickest analogy in the world. The industry that proves that more than any other industry is the car industry, right? The average profit on the new car sales side for like a GM store is about $1,500. But the average profit in the finance department is $3,200. And people say, well, why is that true? I'm like, well, anybody can do research and kind of figure out what the dealership has in the car. So there's no secret about what you're negotiating for. You know as much as the sales guy does, right? But when you get to the finance department, I don't care how sophisticated they are. I guarantee you, unless they can't been around the car industry, they don't know where the money's at. Am I right?
Yeah, absolutely. Absolutely. And they go, we're only making 15, 20, 1,200 bucks on the car.
Look, how many friends have you ever had that told you how they ripped the car dealership off and they got a bargain but then they don't tell you about the finance side.
Yeah.
Right? Because they got clobbered in the finance department and they don't even know it. And so what I'm saying is I have focused on teaching students what to negotiate for and how to negotiate it because how that customer thinks. I've developed a thought pattern. That's what it's not complicated. It just took a long time to figure it out.
Yeah, that actually happened to a friend of mine. She was going to buy a car. She was talking about the deal that she got great. And I was like, did you get the par rate? And she was like, what's that? I said, well, the guy in the finance department, he got a rate from the bank and then he gave you a rate. It's not the same rate he got from the bank. You should have showed him to turn the monitor around and see what the numbers the bank gave him. What was the interest rate that the bank gave him? And I'm pretty sure he put a 0.2 on the back of that, on top of that, and said, here, we got, because he probably asked you, what payment would you like?
And which warranty program did you buy? Because when you paid $3,000, they paid $1,500.
Exactly. And how much monthly payment would you like? I like $450. That's great.
Oh yeah, we can fix you
make
up.
you happy.
We can fix you up. Anyway,
I love it.
So what I've done is, I've worked really hard at making it pretty simple. I know that after I've done this for so many years and so many transactions, my mind's gonna jump to a higher level. But then I'm not being a good teacher if I just teach stuff that if my result is people leave me confused, then I failed as a teacher.
Correct.
I failed them as their teacher. And so I've really worked hard with people to help me break it down and make it simple. I can do complex stuff, but that's not where we start. Right? We start out with some very basic, simple ideas. How do you filter a deal? What are the characteristics of a deal that could be seller financed? And then how do you position it? How do you make the seller like the idea? And then you just go from there. And the reality is a high percentage of the time when I teach someone how to go buy on terms, they're paying a higher price than the cash price they were offering. So you think in terms of it digs a deal out of the garbage can that otherwise wouldn't have closed.
Yeah. Let's transition a little bit to the note space. So for me, I kind of made a pivot and created more of a hybrid model where I'm doing real estate and notes. So wherever I can pull a trigger and deploy capital, I can do that. And what I've been seeing is, over the last couple of years, especially after COVID, it's been getting harder and harder to get good deals at good pricing because equity went up. Yeah. What are you seeing on the note side? I mean, we know there's things that's coming to play, but it's not there yet. What are you seeing on that first mortgage space that you're in?
We've seen more non-performing notes come to fruition in the last 3 months than we have in the last 6 years. And we have we have a significant runway in front of us, first quarter of 2023. We already know where we've got trades made, like, and trades in motion, like at an alarming rate higher than we were in the past. So those loans are finally coming over the mountain. They're finally coming down the side of the mountain that we knew that was going to happen. And then there's a lot of reperforming notes that are in the market. And so, yeah, I mean, the inventory was tight for a long time, but it's showing up. We're going to end we're in December, with, we traded to our student network. We helped them make trades, and we probably got very close to 100 assets.
Yeah.
I mean,
that's awesome.
that's a big number compared to where we were.
It's a huge number, because people were looking for stuff forever. And like, when is it coming? COVID promised. We
tried to be disciplined. There was inventory, but it wasn't priced right. Right. So there was inventory before the time frame I'm giving you, but it wasn't assets that probably you should have bought.
Correct.
Yeah.
Correct. Especially with the wind in the back of a lot of investors, and values were going up 30% over list price. That's not really the market you want to be in. I mean, it's a seller's market all day long. After COVID, a lot of sellers, because people were panicked and they were liquidating certain people trying to get cash positions right. And then the market just was like a dead cat bounce, went the other way. And then it's like, what's going on? Thought it was going to be over.
Yeah.
But the economy was stimulated. But now we're on a side where, as I said before, the pendulum's swinging the other way. It's going to be an abundance of inventory. The good thing is that there's a lot of bad actors out of the business. Regulation drove a lot of people out because they didn't really have, the right systems in place, or they wasn't regulated. So they got all knocked out of the space. So it's less players, real buyers. So it's a great opportunity for notes now if you've made it through the last 5 years. But it's still probably, more of larger purchases where I see that you'll get the bigger discount, not so much on a loan level. But it's a value for that, because the person who's buying it large, they're cleaning it up, making sure the file is good. There's a cost to that. Assignments and everything is clean, so you get good paper. Make sure you guys check out noteschool.com. Note selling is definitely a tool you want to have in your toolbox. Eddie has been doing this for a very long time. I think it's probably the only official place where you can actually get certified to be a real note buyer, learning how to buy institutional paper, learning how to structure, seller owner financing deals, just a whatever the word is, plethora, whatever, you know what I mean? Tongue tied right now, of information that you'll learn there, and the systems, the way they teach, oh man, those PowerPoint presentations are really great, because you just, like you said, seventh grader, visual that just break it down and make it nice and simple and easy. So make sure you guys check out noteschool.com. Make sure you guys check out the next event. It's going to probably be November next year. You kind of do them in November, right?
Yeah. Note Expo is our trade show. We just won Note Trade Show of the Year again. I think we've won it 4 years in a row. So Note Industry Trade Show, we've won People's Choice I think the fourth year in a row. So,
Congratulations. Congratulations. Yeah, it's the best probably Note Expo around. They have it at other places, but it's good when you meet people who are active in the business, who are actually doing deals. And that was one of the things that really, how I loved the notes when I went to my first expo at the time in 2011, 2012. And because there were people there that was actually doing it. It wasn't just this mythical thing, you can make money in notes. And this is definitely a place where you have people who from a note schools doing deals that you can collaborate with. So make sure you guys go to noteschool.com and check that out. Thanks for coming on the show. I really enjoyed talking to you, man. Hope you guys have a happy holidays, and sure I'll see you at one of the masterminds. Any parting words you want to leave for our guests?
The market is going to be kind to those that get it. Just don't be discouraged. Be encouraged. I'm not saying that go into it uninformed, but go be informed, and the market is going to produce big opportunities. I believe that.
Yeah, I believe it too. Yeah, man. Thanks for all the value you add to the community, and thanks for coming on the show. I really appreciate it.
Thank you, Fuquan. You're
Make
awesome.
sure PFREI, another great episode, Passion for Real Estate Investments. I'm your host, Fuquan Bilal. Make sure you guys like and share on YouTube. And if you catch us on one of those podcast channels, make sure you refer a friend. Thank you, guys. I appreciate it.